I'm Ashton Addison for Event Chain from Investmentpitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Dave Hodgson, the CIO of NEM, and the Managing Director of NEM Ventures. Dave, welcome to the show, and it's a pleasure to have you here today.
Thanks for having me here, Ashton.
You're very welcome. I'd love to kick off our time by hearing a little bit on your background in the space and how that fits in with your role at NEM. Then we can dive into NEM.
Yeah, sure. So I've been in various different tech industries for most of the last 15 years or so. The most recent 5 years before coming into NEM, I was doing things like enterprise architect and various types of management consulting, generally for larger enterprises, mostly in the energy industries. I've worked in several different countries, more laterally in the UK and Europe, but also spent time in Australia, New Zealand, and South America. And immediately prior to joining NEM, I was working on a peer-to-peer energy trading project, which required a virtual settlement system to run in parallel with the UK energy settlement system. Blockchain became a natural fit, and NEM was the platform that we chose for that project. And from there, I just started getting more and more involved in the ecosystem generally. And it's been probably coming on 3 years now, I would think, that I've been around NEM.
That's great. And yeah, it's great to be focused on enterprise because that's a big topic moving forward. And we will dive into the NEM enterprise platform as we go in here. But first, it'd be great for the viewers who aren't familiar if you could briefly explain the goals and the overview of the NEM blockchain and the ecosystem.
Yeah, sure. So NEM is one of the older chains that's been around. It originally started back in 2014 as a project. The current version, or version 1 of NEM is known as NIS1. That's been running on public chain live since early 2015. It actually predates ETH by maybe 6 months. The chain itself has been up 24/7, no hacks, no lost assets, basically just doing what a blockchain does for the last going on 6 years now. And over the last probably 4 years, we've been actively engaged in looking at our version 2. So most people in the space will be familiar with the difference between ETH1 and ETH2. This is our equivalent. So essentially what we've done is to take all the good learnings from writing a chain from scratch, all the industry movements between then and now, and a few bits of secret sauce to come up with our version 2. And that's due to launch in the next month or so.
That's very exciting, Dave. And I didn't know that NEM actually predated ETH, but I know that it's been around for a long time, and it is a very reliable platform with lots of developer tools, SDKs, and kits, and things like that. So that's great to hear. And now you're very close to launching NEM 2 and also the release of the Symbol platform, which, from what I read, is going to focus on enterprise adoption. And as you said, that was sort of one of your specialties. Can you talk about what the launch of the Symbol platform means for NEM and for the blockchain industry as a whole?
Yeah, sure. So obviously for the NEM ecosystem, it's massive. I mean, it's most of what we've been working on for the last 4 years. I mean, we've been still focusing on adoption of the current public chain platform, but in terms of R&D, that's where most of the focus has been. In terms of the blockchain industry as a whole, we're seeing several chains now come out with probably what's best described as a version 2.0 blockchain. So you've got obviously ETH 2.0, things like Algorand coming on, Cardano's obviously upgraded recently, and Symbol very much fits into that kind of basket. So we have things like on-chain restrictions and controls that you would need to issue security tokens, and we have the first one due to be issued shortly post go live. We have the ability to deploy as a public and a private chain, and to be able to move data and value between both our own private and public chain, and also our public chain and other public chains. So in terms of enterprise adoption, that makes a big difference because not all enterprises are ready for full-scale public chain adoption for everything. And frankly, it's not the right answer all the time for the stuff they're trying to solve. So the ability for them to deploy some stuff private and some stuff public and have information flow between the two variants makes a lot of sense for them. And we, as you mentioned before, we've always had the SDKs there. The interoperability with non-blockchain systems has always been relatively simple. So I alluded to selecting NEM as the platform earlier on in my introduction. One of the reasons why we selected NEM was because it was so easy for enterprise developers to pick up and use from the get-go. There's no proprietary language to learn. Once they understand how to program with a blockchain, then they can just pick up whichever language they're comfortable with, whatever they're working right now, the same tool sets, and just run with it. And ultimately, that means you get to market quicker, or you get an MVP quicker, or it's more reliable, like depending on which scenario you're in. So in terms of the blockchain industry in general, obviously we're bringing that public-private push. We have a variety of different features on chain that we can get into later on, but they particularly support regulated industries as well as DeFi and kind of crossing into other public chain ecosystems.
That's really interesting, Dave. And you mentioned tokenizing secure assets, and for businesses to be able to, securitize and protect their digital assets. I know that you're already starting to work with some businesses that you're going to work with tokenizing some of their assets upon launch, which is exciting, and we can jump into that. But the mix of the private blockchain and the public blockchain, I think, is super important, as you mentioned, that not everything really needs to be on public chains, and it can bog down for businesses that are trying to be efficient and work with their capital to be using a public chain for everything. Sometimes it just doesn't really make sense. So with those two things mentioned, are those really the core foundation of, as you start to attract businesses to start using the Symbol platform, those are really the main things? And you also touched on, what else are they really capable of doing with this platform?
Yeah, so those are the main sides that would focus towards regulated industries and generally larger enterprises. The feature sets that would be more appropriate for blockchain and crypto audiences generally would include things like the atomic cross-chain swaps between not just ourselves, but basically any chain that supports a secret hash lock transaction. So right now that includes ETH, it includes Bitcoin, Polkadot, and Cosmos have something very similar. So what that means is, as services start to build, you can abstract the UI, UX of that service for the end customer away from the underlying platforms and essentially just flow into whichever ecosystem is most appropriate for what you're trying to do at a given point in time without actually having to sit in any one specifically. Obviously, ETH recently with all the DeFi craze and 2 or 3 years ago, we know that it starts to clog up as it gets particularly popular. Other chains are likely to have the same problem, so why not allow that value to flow around? And obviously ETH 2.0 is looking at fixing that for the ETH ecosystem. But when you build a really nice DeFi project, for example, on Polkadot, why not be able to tap into the 2 or 3 liquidity pools of other large chains nearby? And it's the general direction that most of the bigger chains are starting to go in now as well. So we bring that in natively on chain. It's at the protocol level. You can do that swap in a decentralized, trustless manner. Similarly, you could easily pay any gas fees or any transaction fees on chain on behalf of users. So again, you can abstract that away. Like my mother or my grandfather, they don't really want to be messing around paying gas fees if they're trying to use a mobile app. If you want to abstract away from that, you need to have the ability to be able to pay those fees on behalf of the user, at least for certain types of user demographics. So we have that now baked in as well. And the same function that allows that also allows you to use what's called an aggregate transaction, which is basically 100 up to 100 embedded transactions within one transaction. And they either all succeed or they all fail. So that allows you to run trustless escrow type services, for example, where you don't need a middle person or a middle agency. We can just both put our funds into escrow, and until a given rationale is true, the funds won't be released. And if it expires, then they just go back to the same parties. So we have those kind of functionalities coming in on top of our existing on-chain multi-sig controls. We've always had, or certainly ever since I can remember, have had the ability to issue tokens or assets on-chain just through the desktop wallet, like just through a normal web-based UI. That's still present. You don't need to go and start writing proprietary contracts or get a developer involved. It's literally about 4 or 5 clicks. Most people who could set up like a Gmail account probably could do it. That continues into Symbol, and on top of that, we build in the ability to place restrictions on those tokens, restrictions on accounts. So if you wanted to, for example, set up a cold wallet that could only transfer funds to a hot wallet, you can set out that restriction at a protocol level. So then it doesn't matter which system has been hacked, which off-chain party gets compromised, the chain's going to enforce that type of control. Particularly once you get into custodial and regulated markets, those types of functionalities start to mirror very closely what they do in the offline world already, or the non-blockchain world. So we got a few few tricks up our sleeve, and then there's some new ones coming that we haven't released yet.
Yeah, definitely. And I like that you mentioned the cross-chain and atomic swaps, having that custody of your own funds and coins while you're moving them around between blockchains and not having to rely on those middlemen or centralized exchanges. I think that's a big trend moving forward throughout the whole 2020s. And you mentioned the Polkadot ecosystem, and a couple of these other ecosystems are sort of taking some of that value that's being accrued on the Ethereum blockchain, which has almost $14 billion of liquidity locked into it now, and was almost nothing at the beginning of 2020. And you touched on DeFi, and like that just seems like it's such a huge trend moving forward into 2021. How big of a role do you see NEM coming in and being able to be one of those other partners and be able to capture some of that value so people can have interest-bearing accounts or earn yields and have decentralized finance applications on NEM as well?
Yeah, so we're certainly primed to be one of those key players in the space. I think that space, I could probably count easily 5, probably 10 chains going forward that I would think are likely to be prominent in that space. I would certainly put us in there. So we already have the ability through a custodial solution to get a wrapped XEM. So it's called ST XEM, and it's issued by Stakehound. Essentially what it is staking as a service, which issues a wrapped ERC20 token, obviously on the Ethereum ecosystem, so that you can then get into Uniswap, Aave, Compound, etc. Now that token comes with a yield, like an implicit yield, because the Stakehound teams run supernodes on our network and get paid as essentially a proof of stake super validator. So that comes with, I forget the exact numbers, but it's something like 3.5 to 4% yield, which is paid out in the wrapped token already. So just simply by holding that wrapped XEM, you're getting a yield that you wouldn't be able to get unless you have a significant investment in XEM. That's going to support the symbol release as well. So we will see an STXYM, which is the native token for the symbol chain. And we have 2 or 3 other projects who are looking at wrapping XYM onto both Ethereum and particularly Polkadot. So I think it's going to become more and more important for those liquidity pools to be able to flow to wherever the solution makes sense. So if you need a Turing complete smart contract, ETH makes sense, and it makes sense that the liquidity pool should be able to flow there. If you want to do trustless escrow through a GUI, maybe that's Symbol or NEM. If you want to use a parachain that can do crazy TPS, obviously that's into Polkadot, and really we don't want to stick up fences or barriers to that liquidity being able to flow where it needs to flow to. At the end of the day, it's just one big open market that has no middle people in the way. So
definitely, and I think that's the entire ethos of the decentralized ecosystem, is to be able to move where you want to move and go where you want to go, and have that ecosystem that works together, and it doesn't have those barriers when you're just trying to move to a different ecosystem for a different purpose. Now, we're running short on time, but I want to jump back to the Symbol platform launch upcoming. You mentioned that you're starting to work with different businesses already for the launch to start tokenizing business assets right away. And one of the businesses that you're starting to work with is with Wave Financial, this whiskey tokenization for $20 million of whiskey. So that's a really interesting first partnership. Can you talk about how did this come to be, and what does that really mean to start tokenizing whiskey?
Yeah, sure. So the first of all, I can't take any credit for the idea. It came entirely from Wave Financial. They were looking for a platform to tokenize on. That said, I'm Scottish, so whiskey's kind of close to my heart. So basically, the guys have structured a fund, and they're a registered investment advisor out of California. They've structured a fund that is for accredited investors or for non-US based citizens, which allows them to take a position which gives exposure to essentially luxury Kentucky bourbon. The basic economics of it are, if you can buy enough barrels and hold on to them until they're mature, it goes up over time. And obviously there's a cost of warehousing and that kind of stuff. So the fund takes input from the investors, goes and secures a large quantity of whiskey, and then essentially warehouses that until maturity. That asset class is not generally available to retail investors unless you're prepared to go and buy like 1,000 barrels of whiskey, which is generally more than most people have got space for in the garage. So the fund kind of abstracts all of that complexity, and it gives a bit more access to investors that wouldn't otherwise be able to get there. And then on top of that, that would be a legitimate fund with a proper thesis and rationale without tokenizing. So if you tokenize that on top of Symbol, which the team are going to do probably within Q1 this year, 2021, then it allows you to trade those tokens on a secondary market, and essentially you've then got a liquid investment in the fund sense, not in the whiskey sense. And that then means obviously that you can realize any of the gain as the value appreciates over time, which traditionally you wouldn't be able to do because it's quite hard to go and sell like 1.5 barrels of whiskey to start with the other half leaks. So, you can do that kind of stuff when you tokenize it at a more granular level. The fund already has distribution out of quite a few of the major houses in Asia, particularly through Wave Financial's existing network of distribution partners. So the team there have been running funds for, I would imagine Ben is probably 25, 30 years now. Dave Seymour's been in the industry for about 20, 25 years. They have some serious traditional regulated markets behind them. Happen to also have been in crypto since probably 2013, 14, I would think. So it's a really nice natural fit. It's a partnership that's grown kind of organically over the last year or so, just as we go through learning a bit more about each other's projects and what each other's looking to do, etc. So yeah, we're really excited to see that as the first security token. I'm lucky enough that as part of the work in NEM Ventures, we've also been able to take a position in Wave Financial as an investor generally. So we get to see a bit more behind the scenes as to how the fund works. Obviously, we can feed that back into the requirements, and it all just basically helps everyone.
Definitely, and that is really exciting coming up for the launch. And for the viewers that are interested in following up to the launch and learning more about Symbol, and for businesses and enterprises that are looking to capitalize on NEM's technology and start partnering with you guys, what's the best way for them all to learn more and to get involved?
Yeah, the easiest way is through the website. So just nem.io. If it's specifically the Symbol platform itself, then there's a different URL, which is symbolplatform.com, but you'll get there through nem.io. Most of the comms come out on all of the usual social media channels. So we've got NEM Official on Twitter, we've got NEM Red on Telegram, there's Reddit pages, there's LinkedIn, all the social media you would expect, but you can get to them all from the website.
Sounds great, Dave. I will leave those links in the description box below for the viewers. All the best with the launch of Symbol. I'm excited to follow it myself, and let's follow up in the near future.
Perfect. Sounds good, Ashton. Thanks for having us.